G'day everyone, welcome back to Pete's Investing. Today is April 11, 2023. This is the Nat gas price update. Our major indicator, we've got the daily, the 4 hour and the hourly. On our daily, the CCI 1500 with the moving average 400 is still in a strong decline, whereas the 4 hour and also the hourly in the last hour or two are breaking to the upside. So let's drill down on each of these. On the daily first, again we're looking at the CCI moving average 400, or the CCI 1500, and that's still in decline, so it's a pretty strong downtrend so far, although it has hit this key support area, and that support is at 2064. Our resistance at 3050, so it needs to break above that to be more confident of a bullish movement, and by that stage we might see a bit more of an advance towards the moving average on the CCI. If I drill it out, you'll see there's a couple of support areas. There's this horizontal support at 2064, as I mentioned. There's also this key diagonal ascending line. And there's also this descending diagonal line, just to be mindful of. It's sort of been stuck in that wedge. So let's drill down on the 4 hour chart first. And for those new to the channel, again, we have drawn this Elliott wave, 1, 2, a long third wave, a very shallow fourth wave, bouncing just below the 23%, and then a fifth wave. Now that fifth wave possibly hasn't finished, or it has, we're not sure yet, but this may be the first sign of a reversal, and we'll talk about that more on the hourly. But before I go there, just be mindful, we do respect divergence, and you'll notice there's a divergence on the CCI, a bullish divergence versus a bearish divergence on the price chart. We must always respect divergence. They're not 100% accurate, but they usually play out. So let's go to the hourly chart. Let's see what's happening there. So again, just zooming in, you can see here overnight, it has broken up past this, remember that ascending diagonal trend line we spoke about? So it has broken up past that, the ascending diagonal, and it's now reaching this minor resistance at 2247. It's actually broken up through there and resting on it. You'll notice there in a last few hours, it's actually come back and rested on that resistance area. So not in a position to go long yet, but I would like to see it break above this resistance up here at 3050 to be more positive. But in the shorter term, we did see it break above this, which is a big positive. The next level, key level, will be each of these Fibonacci retracements, but especially this 61% Fibonacci. If it breaks above that and then keeps going, then there's a good chance it's going to reach this major resistance up here. Now, one thing to notice as well, I'll go back to the summary page. This divergence on the hourly chart, you'll notice it started back here. Let me just draw a highlight where that was. So it started back here in this area, this hourly divergence, you can see that there, whereas the 4 hour divergence started almost from that peak, from this area here. So there is two different divergences there. One is the 4 hour divergence, which showed a CCI upswing there, and on the hourly, and then on the 4 hourly, there's a divergence on the upswing on the shorter, the closer time frame there. So again, just be mindful and respect those divergences. So in the meantime, let's be careful about trading this. I wouldn't be going long yet. As I said, it's still very early days. I'd like to see a break above the 61% initially, and then ultimately the 3050 key resistance area. To understand how to properly trade using the average down approach, reference the links in the description below, subscribe us and like on Patreon, and we'll see you in a future video.